Chuck Carnevale. I'm the Chuck in the Markets Up Chuck. And today's blog was titled Nike, What Did They Expect? And the purpose of the blog is that Nike reported I'll call it a decent quarter yesterday for their first fiscal quarter this year. And, you know, revenues were down. Earnings were a few cents more than analysts expected. It was all in all a decent quarter, all things considered. But, you know, the reality of it is the stock opened up on the opening up over 7%. And, you know, the reality of it is if you look at Nike, you can see that it's probably very reasonably priced today relative to, you know, its historical norms. But, you know, a stock moving 7% or 5% or 10% in one day, I will, you know, steadfastly continue to argue is really kind of silly. But let's look at Nike over the last 20 years. You can see that their earnings have been, you know, pretty strong over the first 5 or 6 years. The stock price followed that perfectly. Then we had a down year, and the stock price, you know, followed that. Then we had a real nice period here, you know, going all the way back to, you know, fiscal 1998, you know, through really, you know, fiscal 2008, where earnings were good and the stock price followed it. The price did fall in the recession, but, you know, this was the only time in this whole picture that Nike stock price was actually below its earnings justified level. And of course, it's rallied immediately and come back, and it's up, you know, 7% from this price here today. So, you know, the bottom line is you can see there's a very strong correlation between earnings and market price. Nike pays a nice dividend of 1.7%. You know, has very little debt on the balance sheet. It's obviously a worldwide franchise. And as I say in the blog, probably has many, many, you know, good years ahead of it. You know, I wouldn't call Nike excessively cheap at this stage, although I do think it was, you know, back in February. I do believe it's a very reasonably priced company. It's going to continue to grow at an attractive rate going forward for a company its size, pays a nice dividend, and I think you could, you know, with the strength of their balance sheet, expect that dividend to increase. It's one that you might want to do some research on. And this Chuck Carnevale saying, I hope this gave you some insight into what's going on today. Look forward to talking to you again tomorrow. Thanks for listening.